Hey guys, Stock Saturday, and it's another green week. I'm sure this can't carry on forever. You can probably guess this has been driven by one stock, basically. Cleanspark. The gold and silver side is sort of down a little bit, with gold sort of pulling back. Had sort of a huge run up last weekend, and yeah, it sort of pulled back, but I think a good sign. It broke all-time highs, so it sort of cleared the way potentially to go back there in the future. So yeah, that's not too bad, but not a huge amount of sort of move in most of the other stocks. Stellantis sort of still slowly pushing forward, 2260, so that's quite good. Broadcom sort of pulled back slightly. We'll come with their results. But yeah, not a huge amount of movement elsewhere. So let's get to the news. So Cleanspark released their November 2023 mining update. This is sort of released on the 1st. They don't normally get it out sort of straight away. I guess they must have pre-prepared it because this includes sort of 30th of November. So yeah, running right up to the end of 30th of November. But yeah, so we had the Q3 results, and obviously that is sort of lagging. That's up to the end of September. And this is the full month of November. Quite a good number, 666 Bitcoin mined. Evil number, of course, because Bitcoin is evil. As they say, second highest monthly Bitcoin production, despite increased difficulty. Efficiency improved to 26.4 joules per terahash, so that's good. They're buying the new efficient miners, but basically everyone is competing. Certainly all the US miners are sort of adding hash rate like there's no tomorrow. So yeah, it's just continuous battle with difficulty going up. We are expecting sort of in the halving sort of April time for a lot of old hash rate and sort of old rigs to be probably coming offline. The sort of thought is that they're going to mine right up to the day of the halving and then turn off. So you could potentially have quite a spike downwards, and difficulty may improve a little, but I'm guessing we're going to have an awful lot more hash rate added between now and then. So we'll see. But yeah, 666 mined for the month, and they've sold 402, so they're up to 2,575 Bitcoin holding, which is quite good. That's sort of at today's prices, yeah, $113 million. So it's quite a bit higher than what was showing on the balance sheet in the Q3 earnings. So I do think it's sort of good to keep up with updates like this. And yeah, no serious delays on the Sandersville update. So that's ready for end of year finishing and sort of February energization. So yeah, all looking good. Had the TSMC numbers come through as well. It's looking like October's number was maybe a bit of an anomaly. I don't know whether this was sort of Apple, the new phone, the iPhone 15, sort of getting ready for that, or maybe a big sort of Nvidia order or someone. But yeah, that certainly seems like it was sort of very, very high, although November has come in at 206 billion, so 7.5% down on last year, and sort of highest, second highest for the year. So that's reasonably good, potentially sort of signs that semiconductors are doing well. Good news for your sort of AMDs and certainly Nvidia and Broadcom, people like that. So speaking of Broadcom, they released their Q4 results. They're a bit sort of off from everyone's schedule. They don't go in the sort of October to December schedule, so their Q4 results are already out, and it's looking sort of reasonably good. Not sort of blowing the doors off like Nvidia, of course, but they do get a sort of a reasonable slice of that pie. Quarterly dividend increased by 14%, so that's good, although I don't really sort of focus on the dividend too much. I kind of think sort of, I say watch the profit, and the dividend will sort out itself. So looking at their breakdown, you had net revenue up 4%, which, yeah, I suppose is okay. We're always hoping for a little bit more. That's GAAP and non-GAAP. Net income sort of up a little more than 4%, but non-GAAP sort of with one or two adjustments up slightly more. And $11.06 adjusted EPS. So they're still looking at sort of 23 times adjusted EPS, sort of a bit less on standard diluted. So it's getting expensive, but I do still think the growth is sort of potentially there. Cash flow, as I say, sort of slightly up, a little bit better than revenue, so slightly more profitable operations. Software side sort of doing reasonably well. Software side grew at 7%, and the semiconductors growing at 3%. They're sort of projecting this to carry on as well. And then also the VMware deal has gone through, despite an awful lot of sort of backlash and amendments. That has gone through. One thing to note, they sort of announced this as a $60 billion dollar transaction, and yeah, because it was sort of an option of cash or stock. The stock has risen since the deal was announced, and yeah, people have taken the stock option of that, and so that means the deal is actually worth about 80 billion. So it's quite a lot of money, but they're saying 2024 revenue guidance, including contributions from VMware, about 50 billion. So we're at 35 billion for the fiscal year so far, and they're saying 60% of adjusted EBITDA, which they're at 65 now. So may sort of take a little bit of a knock on margin. Maybe they need to sort of work their synergies through. They were quite, they're always doing acquisitions. They're sort of a dab hand at this now. So hopefully that'll come back up to 65%. But yeah, so 30 billion in adjusted EBITDA from what is currently 23. So they're thinking 7 billion in adjusted EBITDA for an $80 billion acquisition. So you're sort of 11.5 times earnings, if you like, or 11.5 times adjusted EBITDA for that acquisition. So not horrendous. Would have been nicer if they'd have sort of locked in a cash offer and it had been 60 billion, but you can't do a lot about that. Just checking the balance sheet as well. Cash is up slightly, about 1.7 billion, so that's good. Goodwill, of course, I expect that's going to rocket up with the transaction going through. Current debt up slightly, 1.6 billion. Long-term debt is down, so that's just debt moving into current debt. Debt's about the same overall, so yeah, not too bad at all. Do accept, of course, that it's getting sort of high valuation. When I was sort of buying it, it was around 13, 14 times forward earnings, and it's now sort of looking more like 20, low 20s. So it's got a fair bit more expensive, but that is sort of the AI hype, I think. They're mentioned in an awful lot of the AI headlines and sort of roundups of good ways to play the AI theme. So yeah, I can sort of see why they've gone up. People expecting growth. Maybe they're expecting a bit more growth than is actually being delivered. Whether VMware will sort of add more growth to that outside of AI as well. We'll have to see. So yeah, I'm not taking profits at the moment, even though sort of I am up 120% or so. The portfolio tracker doesn't actually show FX gain, so in Trading212 it is showing up about 130%, I think 140%. So yeah, I'm not taking profits just yet. Seeing sort of where we go, holding this over the long term. So, Tritax Eurobox, you only get the 2 updates from them per year, so it's good to see sort of how they're getting on. it's looking a fair bit better. They've not actually been diluting a huge amount at all from the looks of it, and rental income is up 17% on last year, so that's quite good. They were obviously diluting building units, and that revenue is sort of now coming in. So 68 million euros of annual revenue. And adjusted EPS up to 5.51. So stock's now at sort of touching 60s. Did get down to sort of 42, low 40s, I think. Never went into the 30s. And basic EPS, obviously, don't really look at that all that much. They've kept the dividend flat, so they were actually paying more than their adjusted EPS, which isn't particularly good. Portfolio value, understandably, is down over the last year. That's the sort of property market, and certainly commercial property cooling off a little, or industrial property. So that's down 14%. So you've got net asset value obviously come down with that portfolio value and the dilution sort of over the past sort of couple of years. 26% down, 25% down on IFRS NAV per share. So 60 cents price on a sort of about €1 on both measures. That's not too bad. Whether we've bottomed or not, I don't really know. Annualized rent income from where we are, 76 million euros as well. So sort of last 12 months, 68, but going forward, 76 million. So that's pretty good. Like for like growth of 4.5%. So a lot of that is inflation increases, which is good. And weighted average lease term, 8 years. I would also sort of like to see that a bit more if they can, but yeah, 8 years isn't too bad at all. 100% rent collection, which is always good. 5.5% vacancy rate as well. Obviously did used to be, practically nothing. I mentioned the 5.5% is partly due to sort of completing some speculative new units, which aren't let quite yet, but they are expecting to be. So yeah, it's gone up a bit, but hopefully those should get let. You look at their customer breakdown, it's growing even more towards Mango, which I guess is a slight concern. You sort of see Boohoo struggling and ASOS struggling. You've got sort of Shine and people like that looking to muscle in on the space. So yeah, 14% with Mango, I would say, isn't ideal, but yeah, you live with that, I suppose. And then Amazon, Puma, Lidl's, Wayfair, all the usual. So I think most of those are sort of companies that I'd be far happier with. Maybe not Wayfair, but yeah, not too bad. They're obviously a young REIT. They can sort of grow other customers and bring this down without selling off properties. So yeah, nothing too bad there. And balance sheet still sort of looks reasonably okay. 770 million in debt, long-term debt. So that's still at a very low rate. Obviously, wouldn't like to see it quite that high if it wasn't a REIT, but you have to sort of put up with that. All they can do really is dilute or take on more debt. And yeah, they haven't really diluted at all. So yeah, a little bit more debt and increased rental income up to, as I say, 76 million euros. So yeah, starting to turn around. Haven't really sort of wanted to top up on it. Kind of thought there was better opportunities elsewhere, but I've just let it sort of sit there and run as a little bit of diversification. So yeah, pretty happy. So just looking at economic news for the week, we had sort of a few bits and pieces in here. ISM non-manufacturing PMI, that's sort of the benchmark for US economic activity in general, really, and that was sort of slightly higher than expected. Sort of anything above 50 really is good, but that was 52.7, slightly above expectations. Price is still very, very high as well, 58. So yeah, that was sort of the start of the good US news, really. You had the ADP non-farm payrolls at Wednesday, slightly worse than expectations, 103,000, but that was outweighed on Friday. Back to UK, a bit of a strange one still, I think. House price index increased 0.5%, a little bit more than expectations, and it was 1.2% up last month. So, yeah, I kind of thought the house prices would be getting battered with interest rates where they are. You're now down to only 1% down on last year. So the other surveys all seem to be agreeing as well. It's not a one-off. So, yeah, resilient UK housing economy. US jobless claims slightly better than expected as well. That sort of spiked up and was sort of expected to come down slightly, but that's come sort of right back down to roughly where it was before. And then Friday, you had the proper, I say proper, it's still very much manipulated, but non-farm payrolls, 199,000, against sort of higher than expectations and higher than last month. Participation up as well. Average hourly earnings sort of as expected, slightly higher than on the monthly. And unemployment as well, a bit of a surprise. It was sort of expected to stay the same as last month at 3.9% and come down to 3.7%. So, yeah, a bit unusual, but it's sort of contributed to a nice push on the market. People sort of expecting soft landing, I guess. Maybe sort of being able to reduce rates, not because of a recession, just reduce rates because everything has calmed down and we haven't had a recession. So, yeah, the famous sort of unicorn soft landing. Whether that actually happens or not is another story, of course. But yeah, so looking at the portfolio, as I say, it's not been a huge amount of movement in the invest account. Rio and Vale sort of still doing reasonably well. Sort of been a little bit up and down recently, but sort of certainly a fairly high point for Rio. It's been sort of in the 40s and certainly lower than that, and similar with Vale. But yeah, TSMC up above 100. But it's small moves compared to the ISA side. So Cleanspark has been sort of doing all the work basically. It's up 62%, I think, on the week. So that's now a very, very large position. And yeah, I'm not really sort of looking to take profits just yet. I've been reviewing my model, which I will hopefully do a Cleanspark video on Monday. So yeah, keep an eye out for that if you're interested. The gold and silver miners have sort of been coming down slightly, as I say. They seem to sort of take the Sunday night gain in gold sort of quite badly. It got harshly rejected and has been sort of dropping all week. But it's only slightly down from where it was sort of from last week. So yeah, a bit of an overreaction, I think. But Equinox has sort of come down a bit. Coeur Mining has sort of ended up near enough where it was. Fortuna sort of come down a little bit. So yeah, I do think even if if we get sort of a bit of a pullback in Cleanspark eventually, then hopefully the gold and silver miners sort of potentially rising could soften that blow. I do like the sort of diversification side of this, having sort of potentially opposing bets. Gold and silver maybe sort of rising in a risk-off scenario with something like Cleanspark coming down. I'm a big believer in sort of Ray Dalio's sort of holy grail approach, where you have various uncorrelated bets sort of that you think will all do well over the long term, but maybe at different times. So yeah. So my new ISA hasn't really moved all that much. KGHM sort of bumbling around really. It's silver sort of been up and down recently, and copper sort of isn't really moving. So yeah, this is a long-term one. I'm not expecting it to be sort of crazy moves up and down. Pan American silver has been coming down with the gold and silver prices, so no surprise there. The whole ICE is only down sort of 500 quid, I think. So yeah, pretty good on that. Option side has sort of been incredibly volatile as expected. Cleanspark moving up a huge amount, and sort of the other gold and silver miners coming down quite a bit. Equinox moved an awful lot more than the others, even though sort of stock isn't really down all that much. But these are sort of small stocks and fairly, from what I understand, illiquid options. They're sort of, you sometimes go an hour or two without, barely any trading at all in the ones that I'm looking at. So, yeah, the movements are sort of more violent, but hopefully over time, as the stock prices rise, people will be more interested in these options, and the price will be sort of a little more steady. But I'm in it for the volatility. So yeah, that's the portfolio for the week. Up 9,000, up about 4.5%. Slightly better than the markets, but that is largely down to Cleanspark. So yeah, expecting a pullback at some point. Can't go on forever with the large performance in the ISA, but yeah, prepared for that, and we'll see where we go from here. So leave your thoughts in comments below, and like and subscribe. See you soon.